I guess we'll see. Gold and silver are money, and they have been for 5,000 years. They've outlived everything the world's thrown at it, Peter. Two world wars, German hyperinflation, the Great Depression. We will not lose gold's appeal. And the central bankers of the world, the most powerful people in the world who know the playbook, they're showing us that. They're doubling down what they're buying. They're increasing. Since Trump has won the election, they've doubled 2 months in a row their 12-month moving average. And the repatriation, pulling it and bringing it home from the Bank of England, from the New York Fed, or taking delivery off of COMEX or the LBMA, 55 million ounces, either 45 or 55. Let's just call it 50 million ounces. I'm real close. Were delivered in silver off of COMEX just in the month of December. Where is it going? Who's got the money?
Gold's remarkable performance in the global market in 2024 marked its best run in over a decade, with prices soaring past $2,000 per ounce and briefly surpassing $2,700. As 2025 began, prices remained strong above $2,600 per ounce, and analysts predict the rally will continue. Central banks, particularly in China and Saudi Arabia, are leading the charge as major buyers, using gold to diversify their reserves amid the shifting global economic landscape. These nations have been strategically quiet about their gold acquisitions, bypassing traditional reporting systems like the IMF. China, in particular, has been acquiring gold directly from miners, using proxy banks to mask the scale of its imports. This covert accumulation is part of a larger strategy to reduce reliance on the US dollar and strengthen control over the global gold supply, which has surged since 2008. Alongside these moves, the Brics nations are accelerating their efforts to break free from the Western-dominated financial system. Andy Schectman, CEO of Miles Franklin Precious Metals, has emphasized how these countries are working to establish alternative trade routes that bypass traditional Western channels. While creating a new BRICS currency to challenge the US dollar's status as the global reserve currency remains uncertain, the momentum behind these efforts suggests a shift is already underway. As emerging economies like those in the BRICS bloc diversify their reserve holdings and reduce their dependence on the US dollar, they quietly reshape the global economic landscape. This change could disrupt the long-standing financial order, potentially leading to increased competition for the dollar as more countries embrace local currencies and commodities like gold for transactions. We present the clips of Schectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think that's true. What the BIS did to undermine their progression, I think, was a rallying cry that will be that won't be underestimated, or shouldn't be underestimated. And when it's all said and done, it will be looked back upon as kind of the turning point for the acceleration of what they're doing. First of all, let's talk about gold accumulation. The central banks have doubled down their purchases in gold over the last several months. In November and December, or October and November, the last 2 months, I'm not sure if December came up yet, but their numbers were twice the 12-month moving average. One of the things that I find interesting is that China and Saudi Arabia have both been caught recently importing gold that they did not report to the IMF. China said they stopped buying gold. They hadn't done that. In fact, there was an estimation that was just came out on several news sources saying that they said they bought 5 tons. Recently, they think it's 55 tons, 10 times underestimating what they said. The import-export numbers caught both Saudi Arabia and China importing gold through the UK and Switzerland. They never reported it to the IMF. Sorry, it was a mistake, more or less. And as we've talked about ad nauseum, China, when they buy gold through the People's Liberation Army, or when they buy gold that is not 999 pure, it's not reported to the IMF. And I'll get to that in a moment. When the proxy banks, the commercial banks, buy on behalf of the PBOC, it's not reported to the IMF. But when you talk about what China has been doing, they've been flying all around the world, buying doré and concentrate from the miners directly, disintermediating the marketplace. They're not telling the world how much they're buying. They're purposely being private, and they're purposely being opaque, and they are purposely not being transparent. Although they've been caught a few times, they're the largest producers, they're the largest importers, they are a net importer. They have an insatiable appetite for gold. It's just beginning. And so we can continue to talk about how much gold the central banks are buying, but it has not stopped. The IMF says that central bank gold holdings have gone up to 1.16 billion troy ounces, and growing. And they're the largest holders of gold on the planet. They understand this. The trend for this to continue, it's not stopping. When we talk about Brics, you have, I guess I would call it a shadow supply chain, not just in gold, but also in silver. They're bypassing the traditional markets. They're buying doré concentrate. In fact, 75% of all the industrial silver they're using now is coming from concentrate. It's a sludge that goes right, that the miners have, and they scoop up the sludge. They sell it for pennies on the dollar. China's paying double what the West will pay and refining it back in China. And so this is the second largest producer of silver in the world, a net importer, buying gold directly from the miners in South America to disintermediate the marketplace. No one has any idea how much they're buying. This is going to be the new trend. Because of what the West did, because of what BIS did, and in essence, at the 12th hour, embarrassed them and pulled out and called out Russia as someone that they could not be part of this new cross-border payment plan with, when it was developed in their innovation hub 4 years ago with these countries. It's criminal. So now everything that you see is going to be more and more and more opaque. We see 9 new countries that have joined as their partner country. They're not a full member, except one of them became a full member, and that's Indonesia, the largest nickel, the largest holder of nickel in the world in the ground in Indonesia. Their president, Widodo, has called for an OPEC-style cartel of rare earth metals. Almost all of them are mined or found in the Eurasian continent. And this is something that, again, it's only going to get worse because 100% of rare earths are refined in China the last few years, and the majority of it are mined in these areas. But you have Belarus, Bolivia, Indonesia, who is now a full member, Kazakhstan, Cuba, Malaysia, Thailand, Uganda, Uzbekistan. As it is right now, they hold 15% of the world's gold reserves, 30% of the world's land mass, 40% of the world's population, and 54% of global GDP. Not to mention, they control the majority of the strategic routes on sea and many on land. They're growing. And when you look at the foreign reserves that these countries hold, the dollar share of foreign reserves has dropped to 57.4, the lowest since 1994. So they're continuing to shed dollars, they're shedding treasuries, and they are buying gold, which has doubled the performance since 2000. It's up 180% over treasuries since 2008, and it has no counterparty risk. And that's something that's going to continue. Let's see if I have anything else here. I think, well, here's some more. Again, we're seeing this massive shift away and settlement by these BRICS countries outside the dollar, and they're using, which will be BRICS Bridge and BRICS Pay. BRICS Pay is a system that will allow cross-border payment very seamlessly for consumers, for B2B. And BRICS Bridge will use the unit settlement token. They're going to use it, which is a 40% gold-backed token agreed upon in principle. According to Delma Rousseff, the head of the BRICS New Development Bank, the former president of Brazil, we have agreed in principle to the new BRICS settlement, and it won't be a common currency. They will all trade with one another in local currencies, as we see increasing settlement in local currencies, but any net settlement balance will be settled in gold, and they will do it through the deliverable mechanism of the bridge. And they're talking a lot about tokenizing gold to have that trade across BRICS Pay and across BRICS Bridge. All of these things will massively undercut the demand and the need to hold U.S. dollars and the need to hold U.S. treasuries. So that's happening as well too. This is all happening fast. It's something that I think underestimating will be a very big mistake.
Andy Schectman is much more concerned about the U.S. economy, which is projected to experience a slowdown in 2025. Growth is expected to decelerate compared to the previous year, and the labor market may show weakness. While inflationary pressures have eased somewhat, they are expected to stall, potentially leaving the economy vulnerable to persistent inflation. This creates a challenging environment for the Federal Reserve, which must navigate the delicate balance of stabilizing economic growth while fighting inflation. The nation's mounting fiscal deficits and rising debt problems could lead to broader concerns about the long-term sustainability of U.S. economic policies. Meanwhile, global economic growth remains uncertain, exacerbated by ongoing geopolitical tensions. These factors, combined with a weakening U.S. dollar, are likely to continue pushing investors toward gold as a safe haven, fueling its price surge. As central banks continue diversifying their reserves, gold's position as a key strategic asset is expected to remain strong. Schectman emphasizes that gold purchases by central banks will likely remain robust throughout 2025, driven by a desire to hedge against the growing risks of financial instability and reduce their dependency on the U.S. dollar. With global economic volatility increasing and the dollar's dominance waning, many countries are shifting toward gold as a more reliable store of value.
Well, I think there's a flight to safety. It's accelerating. Central bank purchases. In the first 11 months of 2024, we didn't get the December numbers yet, but it's the third largest in this century. I think we're witnessing, I guess you could say, a Bretton Woods 3, a new world monetary order. I think it's centered around more around currency-based, commodity-based platforms rather than fiat currency-based. Dedollarization, of course, is no longer a fringe theory whatsoever, and it's driven by a lot of things, mostly the weaponization of the dollar, but also the Federal Reserve's rapid policy shifts as well. They cause concern. In crises, the Fed inject a tremendous amount of liquidity into the system through quantitative easing and suppress interest rates. We've seen that. And the byproduct, when inflation starts to rise, or the other side of the coin, is they reverse course and with sharp rate hikes, and you can see the disruption that that's caused. And now they're kind of caught in the middle. I think we can see commodity trades and settlement shifts in away from the dollar and local currencies and in gold, all certainly across the southern hemisphere. This erodes the demand for the dollar or the necessity to hold it. Facilitating trade settlement outside the dollar is really a big thing that I see increasing here in 2025 over things like Bridge and its successor Brics Bridge, because what the BIS did to the Brics, Bank of International Settlement did to the Brics at the 12th hour, and they're meeting at Kazan pulling out of Bridge after 4 years of their innovation hub supporting it and helping develop it with China, Hong Kong, Thailand, the UAE, and then ultimately Saudi Arabia, saying at the 12th hour, we can't be involved with any countries that have sanctions like Russia, as if they just realized that R stood for Russia in the Brics after 4 years of helping develop this program. It's espionage. To me, it's James Bond. It's right out of its Bond movie, and I think it will crystallize and reinforce the Brics resolve. Regional trade agreements, obviously, we're seeing more of that. China buying corn, let's say, from Brazil, the second largest exporter of corn in the world, and soybeans, canceling the same time contracts with the U.S. and Australia, buying it from Brazil, paying for it in yuan, settling in their local currencies, settling any trade imbalances with gold. It's happening. It's happening in real time. These are all accelerating. In the United States market, lots to talk about here too. And I'll just go over it, and then you can ask me any questions you have. One thing that really caught my attention, Peter, was already it's been a volatile start to the year, right? You got this Trump euphoria. And that's a dangerous thing in this environment because it's ignoring the fundamentals that were just so bad just a few short weeks ago before he took the presidency. Last Tuesday was the largest volume in the history of the NASDAQ, 13.4 billion shares traded. But what caught my eye was that it was record trading in U.S. stocks under $1, valued at under $1. this is speculative mania when you're buying the penny stocks like this under $1. And it was the highest recorded day ever in trading stocks under $1. Interesting. At the same time, since Powell pivoted and lowered rates on the federal funds rate on the front end of the interest rate curve, we've seen 10-year yields shoot up. And this is the biggest ever move higher in interest rate yields post the first federal rate cut. So the Fed lowers rates on the front end, the 10-year shoots up the other way, the highest ever in history after a cut. And the 10-year, that's in the 10-year Treasury yield after a cut. And it's never been like that, ever, which is a big deal. And that's the market's way of saying, no, we understand that you've chosen inflation over austerity. We will not hold any duration treasuries without a much, much higher yield. Of course, we have, by all measurements, record PE ratios, record CAPE ratio, record market cap to GDP ratio, record concentration in the 7 stocks. They're at or near all-time highs based on every available metric that you on Wall Street would have followed forever. And then you have, this super fragility, I think, where you look at the Russell 2000 or the Wilshire 5000, and the majority of these stocks are treading water barely, as 7 hold up the entire raft. And maybe this is why Warren Buffett's in $300 billion in cash and why central banks are buying gold. They see this. At the same time, by every single metric that we've ever used, we're either in or very damn well near a recession. You had the uninversion of the yield curve, which is predicted, I don't know, every single recession since the 50s. You have the SAM rule, Claudia Sam, where the moving average of unemployment goes up above 50 basis points above the 12-month moving average, something to that degree. It's predicted 9 recessions in a row. It was triggered. You have record money market growth, over $7 trillion in money markets, always characterized by a recession or running into a recession. And you have lower short-term rates, not long-term, short-term. And you lower short-term rates because it's not stimulus, but it's associated with recessions and to help revive an economy that needs its help as it's sinking deeper and deeper and deeper into this recessionary trap.
De-dollarization isn't a new trend, but it has gained traction in recent years. As the U.S. continues to impose sanctions and pressure other countries, more nations recognize the risks of over-reliance on U.S. dollar-denominated assets. This shift is driven by a growing realization that dependence on the dollar can expose economies to financial instability and sanctions. While this de-dollarization trend is expected to be a long-term process, it is likely to become irreversible in the coming years. The ongoing push by countries to diversify their reserves and find alternatives to the dollar is already altering the global financial landscape. In light of this, individual investors must navigate a more unpredictable market, especially with gold prices at historically high levels. Analysts recommend a cautious, balanced approach to investing, advising diversification of portfolios to mitigate risks. With the rise of de-dollarization efforts, what do you think will be the long-term impact on the global financial system? Share with us in the comments section below. If you found this message compelling and enjoyed the video, be sure to give it a thumbs up, share it with others, subscribe to our channel, and turn on post notifications for more thought-provoking content.